Welcome to ForexTV.com. It's Thursday, January 10th. I'm Remy Hookey for New York Forex Market Buzz. In New York afternoon trade, euro dollar is at the 1.48 level as of 1:15 p.m. Eastern Time. Sterling dollar is at 1.9585, while dollar yen is around 109.20. Briefly looking at today's key events, the BOE left its key interest rate unchanged at 5.5%. The market had been divided over whether the bank would cut rates at today's meeting. And the ECB held its key interest rate unchanged at 4%, and following the rate announcement, ECB President Trichet raised concerns about inflation in the Eurozone. And briefly looking at today's U.S. data, new jobless claims fell 15,000 in the latest week. The 4-week average fell to 341,000. Joining me this afternoon is John Person, President of National Futures. Good afternoon, John.
Remy, good afternoon. Thanks for having me.
Thank you for joining us today. Well, in today's session, the focus has been on central banks. Following the unchanged rate decisions from our neighbors across the Atlantic, Bernanke's dovish comments sent out a signal to the markets. We are seeing equities back in positive territory and euro dollar above 1.48. So, John, for Forex traders, how do you see today's events affecting the fundamental outlook for the U.S. dollar?
Well, it's obvious of the connectivity between dollar weakness and, of course, interest rates and how interest rate differentials play in global market schemes, such as with where we see the pound has significantly weakened against the U.S. dollar in the last 6 weeks. The euro currency, on the other hand, has risen against the U.S. dollar, and I think that the cause and effect is simply that we're starting to see a difference in economic conditions within the three areas. Number one, it looks like Ben Bernanke today has strongly put his words out that the Federal Open Market Committee, when they meet January 29th, or even possibly perhaps before, is going to lower interest rates one more time here in the U.S. So that'll probably help shore up a falling economic condition. Number two, we have, as you mentioned, Trichet, who is very concerned in the Eurozone, and even Germany, the central bank, has always been very adamant on inflationary fears, and so that they are going to stand pat. And the big worry, of course, in the UK, as economic condition has fallen, and of course with housing slump, it probably would have been beneficial had the UK Bank of England lowered interest rates, and they did not. So I think that overall, looking at the Forex markets, we're on tap to see, again, a weakening U.S. dollar against a stronger euro currency, as the Eurozone economies should actually probably perform or hold steady better than the U.S. in the next 3 months.
Well, John, if we could shift our perspective over to the technicals now that we've covered the fundamentals. Well, with, as you mentioned, you're advancing versus sterling and dollars. What are your levels of support and resistance for euro dollar as well as sterling dollar?
Sure. The euro currency, I'm thinking, it's going to be tough to, get this market much above 150. Like I said, I think the comparison, looking at the technicals, in this situation, you probably have to look at the overall fundamental picture, and one has to ask itself, well, if the euro currency is going to rise much sharply higher against the U.S. dollar, how much higher can it really manage before hurting or causing an imbalance in the different economies? And I don't think 150, 151 is much. I don't think further prices above that level is attainable or sustainable for a prolonged period of time. So I would say on this rally up here, 150.5 to 151, big resistance in the euro currency.
Okay, John, now let's take a look at the Aussie as well as the Loonie. We've been seeing commodities with gold continue to soar to new records, edging closer to the $900 an ounce level. So if you could give us your fundamental and technical analysis for the Aussie dollar and the CAD.
Yeah, I think that the same thing bodes well there. These are commodity-based currencies, and again, as commodities based in U.S. dollars, such as gold and crude oil, we're starting to see crude oil, get closer and closer to $100 and holding, and gold crossing and getting close to that $900 barrier. It all states one thing, that we're maybe in a U.S. economy situation where we're looking at stagflation, and that countries that are producers of oil and gold will probably have a well-rounded commodity-based value so that their currencies will hold up relatively well against the U.S. dollar. So in cases, the key is to watch these commodities. That's the tie-in, the U.S. dollar and the commodities, and then you could trade accordingly for individual speculators and stay with the general trend direction for those currencies.
And last but not least, if we could take a quick look at the Japanese yen. Given low interest rates in Japan and concerns over a contraction in their economy, as well as movement for the yen based on risk appetite, which yen crosses will you be watching closely, John?
That's a great point, great comment, because, one thing that I think has lost a lot of focus and attention was the big issue people were making about the carry trade and, how that was going to affect cross rates. And quite frankly, I think that, when you look at the dollar index against a basket of currencies, we're not seeing it. If it was just weighted against the euro currency, the dollar would be, obviously at almost new record lows. When we look at the dollar weighted against the yen, and we look at the dollar weighted against the pound and the other foreign currencies, the other majors, then I think that, you come back to the same story where you say, okay, let's look at each individual country and what's going on. And when you look at Japan, you say, what's going on with that economy? First off, they're a net importer of crude oil. So obviously, higher oil prices is going to be hurting that country. When you say they're a net exporter of products and goods and services to the U.S. as one of their biggest customers, and if we are expected to see an economic slowdown, as retail sales have shown during this dismal holiday season, you can't expect the Japanese economy to perform very well because they're having higher costs on goods such as energy, and they're having lower sales as their export products are showing. So overall, the Japanese yen, I think we're going to be stuck in some type of a trading range, 109, 108.5 up to possibly 114, 115 in the next 3 months.
Okay, John, as always, thank you very much for your insight and analysis into the Forex marketplace. That wraps it up for your Forex Market Buzz with John Person, President of National Futures. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.